We're going to explore the biggest fear of investing right now. Is it the fear of missing out on higher gains to build your nest egg for retirement, or the fear of losing all of your retirement savings? So stay tuned for the full episode. Thank you for watching. This is Richard with Wisdom Investor. We're at some interesting crossroads right now. We've had some excellent gains in the real estate market and also some outstanding gains in the stock market. However, the question is there a fear of missing out of higher gains, or are prices going to fall off a cliff? On a previous video, we discovered some of the issues people are concerned about regarding retirement. They're worried about higher health care costs, health issues, draining savings, a major market downturn to significantly reduce assets during retirement, not being able to afford a lifestyle I desire, and not knowing how to best generate income and draw down my assets in retirement. So we're going to take a look at the biggest fear of investing now that could be real estate or in stocks and bonds. Is there a fear of missing out in more gains for your retirement nest egg, or a fear of losing money due to a stock market or real estate crash? I ran across some interesting information about where people want to invest over the next 10 years. Let's take a look at this. Here's a survey here done by Bankrate. It said real estate and cash top Americans' list of preferred investments for the next 10 years. Here's the results of this survey completed by 1,000 people of all ages in May of 2021. 28% said that real estate was their top choice for investment in the next 10 years. 25% said cash or savings, and 16% said the stock market. 13% said gold. Now, I found this real interesting that 28% felt like real estate would be their top choice over the next 10 years. Now, real estate has gone up incredibly fast over the last couple of years. But is it going to continue going higher? That's the question here. The other interesting thing on this is that 25% wanted to be in cash. Now that's real interesting because cash right now, savings, CDs, certificate deposits are paying less than 1%. The other interesting thing here is 16% in the stock market. Now the stock market has some excellent gains over the last 10 years. However, are people concerned that the stock market is going to go lower or even crash? Let me know what your opinion is on this. We're looking at a graphic here of the purchase house price index in blue. You can see how the purchase price of a house has accelerated higher, and the red line is the average hourly earnings. You can see back in 2006, housing purchase prices peaked and then started to come down, and they came back down to the average hourly earnings. The question right now is housing prices going to continue higher, or is this going to come back down to the average hourly earnings line? Now, the real estate return on investment for both homeowners and investors has been extremely good over the last 5 to 6 years. Now, real estate doesn't go straight up. It does work in cycles just like the stock market. If you're a homeowner sitting on large gains, about the only way you can take those gains is by selling the house. The next question is, where are you going to go? Or you could get a second mortgage, but you do have to pay that back. Also, as property values increase, taxes go higher in most states. So what do you think about real estate? Do you think that's the place to be in the future? Or are we going to have a downturn? Are we due for a downturn? Now let's take a look at the stock market. We're looking here at the NASDAQ 100 QQQ Technology Index, and you can see how this has had a nice move higher. Now the NASDAQ 100 has averaged 15% over the last 15 years. Now we can't promise that the future gains are going to be like that. So the question here also, is the stock market going to be able to continue higher? Or are we going to get a pullback or even a stock market crash? Here's the S&P 500 index. You can see here our trend indicator has actually been moving down, but the price has continued higher. So what's causing that? There's a couple of things here I want to point out. One of the reasons the S&P 500 has continued higher is because the heaviest weighted stocks like Apple Computer, Microsoft, Amazon, Facebook, Google have continued higher. But I believe a bigger reason the S&P 500 and most stocks have continued higher is the Federal Reserve continues to pump money into the stock market. They're putting in about $120 billion per month into the stock market. And our current president is wanting to spend about $6 trillion in infrastructure and various other incentives to keep the market moving. Here's an investment survey from the American Association of Individual Investors on where the market's going to be in the next 6 months. And 48% of the members think the market's going to be higher, going to be more bullish. 22% feel like the market is going to be bearish or negative. Now, historically, 38% is an average, so 48% is higher than the averages. According to contrarian analysis, when we have too many people on one side of the market, we can at least get some type of a short-term pullback. So do you think the stock market's going to continue higher? Leave your comments here. Let's take a look at some past trends here. Here's an 86-year cycle of the Dow Jones Industrials. We're in mid-year right now. Typically, the Dow Jones moves up into July and then, based on past history, has moved lower, creating a low somewhere around September, October area. Now, there's no guarantee it's going to do that. It may continue going higher here, especially with the Fed continuing to juice the markets up. But this gives us an idea of what could happen. Here's a seasonality chart for the S&P 500. This is the first year of a new president. Typically, July is higher, and then we show that dip again going down in September, possibly October. Now, what do we do right now if we're an investor in the stock market? If you've been an existing investor, you have money already in the markets, you're in good shape. Even if we have a 10% pullback, that's nothing to worry about. Now, new investors, I would not be plowing a lot of money here at the tops. I would wait for some type of a 5% or even a 10% pullback before I start investing. According to that Bankrate survey, 28% of investors think real estate's the place to be over the next 10 years. 25% feel like cash is the place to be. And 16% feel like the stock market's the place to be. In my opinion, with the Fed juicing the markets and trying to push up and stimulate the markets, and also with the president coming in with about $6 trillion of investments, I think the stock market is actually going to be the place to be over the next 10 years. That doesn't mean sell out on real estate. Real estate's still going to be a good investment, especially in times of inflation. But my preference right now would be the stock market. I want to thank you for watching. If you like the content of the video, refer it to a friend. Stay tuned for the next episode.